unequal people. This is where the government came in with a lifeline of liquidity. The SNB is there full and square. We have 100 billion of liquidity for the new entity. We have losses guaranteed up to the tune of 9 billion. This is Switzerland trying to ensure its borders remain robust in terms of banking. But bailing in the bondholders is the single most disruptive aspect. Have they absolutely inverted the capital structure of banking? These bells are ringing, and that toll of that bell is for the demise of Credit Suisse, the birth of a new bank, and a whole new view on Swiss banking.
Manus, could you set the scene better? I do not think so. We'll be coming back to Manus, of course, throughout the hours for the analysis. And again, the key takeaways in terms of the implications for these bond markets, that top tier, the riskiest tier, the AT1s, and how that plays out. $275 billion, just that segment of the market. And then, of course, you have the central banks led by the Fed coming out with these liquidity positions and additional support in terms of dollar funding, and we'll break down the implications for that, raising many questions, even as arguably you put something of a barrier around the crisis that is Credit Suisse. Across the Asian Pacific then, the benchmark index currently down 1.3%. Banks, of course, currently in focus across that index. You can draw out HSBC and Standard Chartered. HSBC, the last time I checked, was down around 6%. Across the Hang Seng Index, and again, banks within this, down 3%. The concerns emanating from that decision to write down those bondholders to zero. Across the European futures, you're looking at losses of around 0.5%. And of course, we will be zeroing in on the fallout for the European banking sector. To what extent does this lead to reassurance or raise additional questions? And when those stocks start trading at 8 o'clock UK time, we will be focused on those. Futures in the US currently range bound as First Republic continues to be a question mark for regulators there. SVB, regulators still trying to sell off parts of that bank. And we know that First Republic as well, after a 33% drop in terms of stock on Friday, is a key concern. Cross asset, we're looking at the dollar currently down 0.1%. The Swiss franc remains in focus for us. To what extent is this a safe haven bid, or indeed a litmus test now of the health of the Swiss economy? The 2-year at 384. Not a lot of movement at the front end right now, but you had seen a little movement earlier in the session. Of course, last week, you saw yields at the front end of the 2-year moving more than 20 basis points every single day of the week. Brent, $72 a barrel, down 1.3%. Goldman Sachs revising its view lower on the prospects of oil linking to a weaker economy. Wow, we have team coverage, of course, for you this morning. Manus Granny live in Zurich with the latest Rally Titel on the market reaction, plus analysis, of course, from Head of Trading at MPPM, Guillermo Hernandez-Samper. We'll come to that guest shortly. Now, UBS has agreed to buy Credit Suisse in an historic deal aimed at containing a crisis of confidence that had started to spread across global markets. Colm Kelleher, UBS chair, says the deal is ultimately beneficial for the bank.
It's a historic day in Switzerland, and a day, frankly, we hoped would not come. I would like to make it clear that while we did not initiate discussions, we believe that this transaction is financially attractive for UBS shareholders, protects UBS from additional downside, and should support earnings growth over time.
Okay, for more, let's get to Zurich with Bloomberg's Manus Granny. Manus, a shotgun wedding is how you described it. Is this where stability came first and all other issues second?
I think, yes, Tom, it did. It took priority in the stack, which was about delivering, I suppose, liquidity and a lifeline to this country and to the people of Switzerland. And then Colm Kelleher, the chair of UBS, the chair of the new institution, went on to say, dare I say, global. So this was about sending a message to the world, which was the other alternatives were just simply utterly unpalatable. There were moments during that press conference, I can't count how many, where they kept saying, this is not a bailout, this is not a bailout, this is not a bailout. This is everything that is a bail-in of the bondholders. Mohammed Al-Aaron says it's not clean, but it's the best option. I would say to you, Tom, Kelleher talks about the opportunities for UBS, but in the end of the day, this was about trying to stymie the flight of capital and deposits out of this Swiss institution, Credit Suisse.
And the shock for the markets coming through in terms of that decision around writing down those AT1 bonds, Manus, despite the fact it's written into the prospectus. This is what happens in a moment of crisis. But is this move ultimately the killer for these markets?
I think we need more detail. I know Valerie's going to take you through some of the components of when these COCOs were used before. I just got off the phone with a couple of people who work here in Zurich and in Dubai, and they said, Manus, we need more detail. First of all, have they inverted the capital structure? Where, Tom, equity gets wiped out and the bondholders maybe get a sniff. Here we have potentially an inversion of the capital. But what we need detail on is whether they are COCOs, contingent convertibles, or COGOs. And it's very important. COCOs turn into equity, shares. COGOs turn into cash and go onto the balance sheet. We need to know, we need clarity around that to move forward. This looks like, smells like, and feels like an inversion of the capital structure. Tom.
An inversion of the capital structure, and certainly that concern is playing out across the banks in Hong Kong right now. Looking at HSBC, currently down 6.4%, Standard Chartered also low. Manus Cranny on the ground in Zurich, charting these historic moments for us. Thank you. Now, among the biggest losers in the shotgun sale of Credit Suisse are investors, of course, in those risky parts of the bond markets, those AT1s. $17 billion of them are now rendered worthless. Let's bring in Bloomberg's markets reporter, Valerie Teitel. Valerie, what is the context then and the precedent for this AT1 write-down?
Tom, this is the largest ever loss in Europe's AT1 bond market, and it's possible it might lead to an industry-wide repricing, but it's going to take a while for the market to digest the impact of this. Many people are drawing parallels to the previous precedent that we have. That was in 2017. Banco Popular was absorbed by Banco Santander, and there was a $1.35 billion write-down of their AT1s. The very important difference there is that the equity was also entirely written off in that example. That is complete opposite to what's happened overnight with that $3 billion going to the shareholders of UBS, of Credit Suisse.
And Valerie, indeed, the other huge headline, and this is and was of itself a hugely significant moment from the central bank action. The Federal Reserve leading the charge alongside five other central banks in terms of providing additional liquidity via dollar swaps. The importance of this move, what it tells us about the anxiety amongst these central banks now.
Look, a lot of people are saying that this is a move by central banks to preempt any dollar liquidity funding stress. The last time central banks have done an action like this was back in March 2020, and that really capped a peak for the dollar back then. The BOJ hosted an operation overnight. It should be noted that there were 0 bids, so far there isn't any squeeze for dollar funding seen in the Asia market. The Bloomberg Dollar Index, over the last 2 weeks since this crisis started, has traded nearly flat. So the stress of dollar funding isn't there yet. Most people see the Fed opening these swap lines as such as a move to preempt any future funding stress.
Okay, markets reporter Valerie Teitel on the significance then of the write-down to 0 of these AT1s and also the backstop coming through, or at least the liquidity injection in terms of these dollar swaps from the central banks led by the Fed. Thank you. Joining us now is Guillermo Hernandez-Samper, the head of trading at MPPM. Guillermo, good morning. Wow, what a day to have you on. Fantastic to get your thoughts. Let's start here. Have they, on one hand, the authorities in Switzerland, put a ring fence around the systemic risks of Credit Suisse whilst opening the door to another market risk, which is these AT1s? What is your take on what's happened over the last 24 hours?
Good morning, Tom. Thanks for having me. Well, the fear of a contagion must have been very, very big. To close such a deal over a weekend, so all central banks, governments, so they must have been very anxious to close the deal to avoid any contagion. So, and I think it's still too early to say that we are back in calm waters, far too early.
It's too early to say we're back in calm waters. Are there particular names within the banking sector that stand out to you right now that are looking the most vulnerable? What are you watching for, Guillermo?
Well, the stock prices usually don't lie. So we had HSBC under pressure a little bit. So we had last week comments and rumors about also two other institutions here in Europe. We had these ECB comments. So it won't take long until banks with liquidity issues will be identified, and also that must happen very, very quickly to find the appropriate support for those institutions and for markets in general.
And your take on what we've heard about the AT1s. Look, as we mentioned, it's been written into the prospectus of these bonds. If you buy them, it's very clear. There in the prospectus, it does caveat that should you get a moment of financial stress for the banking institution, then you could see these assets written down to zero. And that's exactly what's happened. And yet it's the capital structure, it's the priority that's been put on the bondholders taking the hit versus the stockholders. That is the concern for many. What is your take on the broader implications of these AT1s in the bond markets?
Yeah, usually, as you say, Tom, usually the stockholders are the first ones who get a hit. No, this time it's different. So, and I don't think that we can already oversee the impact of the write-downs of those bonds. So it will take more days to evaluate this situation. Yeah. So, and I'm sure a lot of people are scared of if that something like this could happen to other bondholders as well. And so there will be action from the investor side, and all the ones that suffer those losses right now, I'm sure that they will speak to their legal department or to their lawyers to prepare any kind of legal action.
Okay, Guillermo Hernandez-Samper, Head of Trading at NPPM. Thank you for joining us on this historic morning. We appreciate it. We're going to take a deep dive, of course, into the historic Credit Suisse deal in our banking breakdown. Special editions of Surveillance Early Edition. That is anchored by Francine Lacroix in Zurich from 9 a.m. UK time. This is Bloomberg.